Dupla morning true. Morning, everyone. Firstly, I'd like to recognise the traditional owners of the land on which we meet today, the Gadigal people, and recognise the elders, past, present and emerging. I also extend this acknowledgement to all Indigenous leaders here today, from Australia, Papua New Guinea and beyond. I also want to thank the Chamber of Resources and Energy for exceptional efforts in arranging this conference every year, this being my first year attending the conference as well, like a few others. So first, a quick review of our economy and its near-term direction. The economy continued to recover from the negative growth seen during the COVID years in 20 and 21. We had an impressive growth in 22, with a 5.2% in GDP, driven by rising LNG revenue and higher gold and copper prices. But most commodity prices eased this year, and despite increases in copper and gold, our economy has slowed, and growth is expected to be around 2.7% this year. We expect growth to rebound in 24, with Porgera recommencing and the start of other key projects. Inflation has remained low this year after peaking about 6% in the third quarter of 2022. Headline inflation increased to 2.2% in the 12 months to September this year, up from 1.4% in the year to June. So with increased growth in 2024, we expect inflation to trend higher, and this is something the bank is keeping a very close eye on. Access to foreign exchange, yes, is of course a concern for all of you and has been challenging since 2015. We know that you have spent years struggling to access foreign exchange, and we are trying to help you as best as we can. As you know, the key resource projects have been closed, reduced and/or delayed, and this has severely impacted our access to currency. This year saw record interventions from the Bank of Papua New Guinea, totaling in excess of $1.5 billion. This is the highest ever intervention program by Bank of Papua New Guinea. As a number of you have observed over the last few days, 2024 will see an improvement in inflows from the resource and energy sectors, and we appreciate further investments in the growth of these industries. The bank, of course, will continue to support the market, although we will need to reduce this from 2023 levels. But we must also prepare our economy structurally to reduce the reliance on extractive sectors for foreign exchange. We know that the resource sector runs in cycles, and we must not allow a foreign exchange shock to damage our economy again. This will be a major focus for the bank as we get the policy settings right for the government's growth agenda through to the end of the decade and beyond. Into early 2024, the kina is likely to trend lower. We're unsure to the extent it will ease, but it needs to rebalance to reflect the supply and demand. We will monitor the currency very carefully, assessing it at different levels and at key cross rates, including the Kina-Aussie cross rates. Another important issue, which may not be as obvious to everyone as our open market operations in the FX market, but still significant have been the adjustments we have made to our monetary policy framework. We have been working very closely with the IMF on this, and we jointly undertook a thorough review of the effectiveness of the transmission of monetary policy through the financial system. One of the main barriers of the effective transmission of monetary policy has been the excess of deposits or excess liquidity in the banking system. Excess liquidity has been long a problem in Papua New Guinea and has resulted in our monetary policy failing to be transmitted through to the financial system. If the central bank cannot sufficiently influence the cost of money or the cost of loans and deposits, then our monetary policy framework is hindered in its ability to ensure price stability, much less keep it much under control. As central banks speak aside, interest rates have been very attractive, So the commercial banks have been content to leave funds on deposit with little commercial incentive for them to accept the perceived risks of providing loans. So to counter this situation, in August this year, we introduced a fixed rate, 7-day central bank bill auction with no predetermined limit on a bid amount in an effort to absorb all the excess liquidity. Now, while there are some structural issues, and I'm glad to hear that it's been acknowledged, we need to address on the concentration of these excess deposits and where they are held. And the 7-day CBIL bill, so far, I'm pleased to say, is working as we expected. In a further step to improve monetary policy transmission, the bank recently introduced the opportunity for superannuation funds to bid for central bank bills, and that's expanding the market and increasing competition. And we will shortly be introducing a central securities depository portal, which will enable the commercial banks and other investors to trade intraday and overnight. Now, this is an important initiative for the bank and one which will again broaden our market and increase competition. Over the last year, the bank has undertaken a significant envisioning exercise to help us prepare PNG's financial system for a digital, globally integrated future. That future is not far off, and PNG needs a modern, responsive, and inclusive financial system, one that serves and supports all our citizens, from cities to the remotest villages. And to do this, we need to increase competition and diversify the financial services offered to our people. We want to see more competition in our financial sector, and I'm pleased to note that there are now several financial institutions upgrading their licenses to provide full banking services. Some are close to launching operations as commercial banks, while others are approved in principle with further criteria to be met before the final decision is made. We are also keen to see new participants in our financial sector, and I note the Bank of China opened a representative office in Port Moresby early this year with a view to engaging with the business community and assessing the merits of opening a branch network. As the third largest economy in the Pacific, it is important that we have a strong, reputable financial system, and having international banks like Bank of China establishing in PNG is a strong positive signal. We are also watching our international partners to see how they are innovating in services and in particular cross-border transactions. I know this is a critical issue for many of you in this room. As I noted earlier, foreign exchange is one of the biggest barriers our businesses face right now. We're watching our largest partners, such as Singapore and of course Australia, to see how they are responding to the many challenges of cross-border transactions. Faster, cheaper, more transparent and more inclusive border payment services could deliver enormous benefits to our citizens and support inclusive economic growth, diversified international trade and financial inclusion. We are also assessing a number of technologies, including the central bank digital currencies, with partners such like Singapore and Japan, who are piloting for the potential in cross-border payments. A key priority for Bank of Papua New Guinea right now is the role digital transformation can play in financial inclusion, and particularly banking in the remote areas. And I would like to just spend a few minutes discussing it today in broader terms than I normally do. You have heard in other presentations about the challenges brought by PNG's beautiful but rugged terrain. Infrastructure, roads, bridges, power, telecommunications, and essential services are lacking in all but urban centres. To build a strong and stable Papua New Guinea, we must bring everyone on the journey. And this means financial inclusion is essential for the stability and growth of our economy. An inclusive society allows for the individual to participate fully in all aspects of life, reflecting the value that is placed on equity and on fairness, and is testament to the fact that inclusiveness makes us all stronger. We are actually measured by how we treat our most vulnerable And when you look around the world, wherever you see a thriving community, you will find inclusiveness at its core. Digitization is the key to expanding financial inclusion, and particularly in remote areas. So one of the most significant challenges in expanding financial inclusion is identity. And this, along with remoteness, stops much of our population from participating in the formal economy. We recently introduced a card-based identity document, Digicen ID, who is partnering with my bank to create digital identities in remote areas without internet connectivity. Technologies like this will contribute significantly to financial inclusion. Digicen is a graduate of our regulatory sandbox, which aims to identify and assist innovative technologies that increase financial inclusion to successfully enter Papua New Guinea. I'm pleased to say that a new product, Pinbox, has commenced in the sandbox in partnership with Nest Fund. Pinbox provides a solution for micro-pensions, micro-superannuation, and micro-insurance to individuals and SMEs outside the formal system. This means that all Papua New Guineans will have an option to save for their retirement through reputable and high-quality products, no matter where they are located or what the incomes are. We're now welcoming and assessing other solutions that serve our citizens that have limited or no access at all to the formal financial sector. We are also looking at how we can reduce fees and charges to our citizens. We recognize the cost is a major barrier to financial inclusion, and that more needs to be done to lower the cost of transactions, particularly as the world moves away from cash transactions. Greater transparency in fees and charges is critical to this. As many of you know, the Bank of Papua New Guinea provides a number of platforms that allow more efficient transactions within a financial system. These include CATS, the Kino Automated Transfer System, and RAPS, the Retail Electronic Payment System that our commercial banks use to automate transfers between themselves. The provision of these systems has dramatically reduced the cost to these banks of providing this service and has likewise improved speed and reliability of domestic transactions for the consumer. So we're now actively looking at other ways where we can work with the commercial banks to reduce the cost of these transactions, and particularly where BPNG is providing that digital infrastructure at minimal cost to the user. As I mentioned, transparency will be a critical part of this, as will improve technologies. We are making an effort to learn from our partners, particularly those who are likely highly digital advanced, like Singapore, to bring the best of the tried, tested, and verified solutions to our market. This will help prepare us for the coming boom and help us support you as you bring growth and prosperity to Papua New Guinea. Are we ready for the boom? Yes, certainly. But more importantly, the central bank is focused on the appropriate policy settings being in place to ensure Papua New Guinea is best positioned for long-term growth, whatever the outcome may hold or the future may hold. The bank is looking forward with an ambitious agenda. I guess it's our time. I look to all you partners on this journey. The Lagatoy of digital innovation has sailed, and we must all be part of its journey. Bank of Papua New Guinea is preparing to support you once again on this journey and to ensure that all our citizens have the opportunity to share in the prosperity of the coming boom. I welcome your comments on the panel session and thank you all for your time.